guys, Robert from the College Investor here, and I am excited to have a short video with you today about how to get a private student loan with no cosigner. So the fact is that the CFPB has recently had a study done and 90% of private loans had a cosigner. And why are cosigners hard on people? Well, because the cosigner is equally as responsible as the borrower when it comes to paying back that student loan debt. And that can be hard because if the student doesn't make payments, like it could hurt the other person's credit. And even in crazy scenarios, like if the student dies, like the cosigner is 100% responsible for that loan. And so like not only is there trauma with like a student dying, but like the parents or whoever cosigned is still on the hook for the debt. And so whenever it's possible, I always try to recommend people get a private student loan with no cosigner. Now I realize it's not realistic for many people, and we're going to talk about why, but let's dive in and we're going to show you how to qualify for a private student loan with no cosigner. So to start with, private student loans operate much like auto loans or mortgages. So with a private student loan, like the collateral on the student loan is your earnings. And so like you can get a higher limit because you're young. The borrowers, the banks or the lenders think that you're going to make a lot more in the future. And then based on US law, they know that you can't really get rid of these loans in bankruptcy and that there's a lot of ways for them to collect on this debt. So it's a very safe loan for banks to lend to you. But that doesn't mean they're great for you. So when lenders are looking to lend a private student loan, they're looking for three criteria. First off, you have to be a US citizen. The reason going back to the law piece. So they want to be protected. You have to be a US citizen. Second, most lenders are going to want to see a good credit history. Now this is hard for when you're 18, 19, 20 because you don't really have a credit history. But if you want a private student loan with no cosigner, you need to have a good credit history, a score of 700 or higher. They want to see payments made on time for a couple of years. So that's a challenge. One way to get around this is to maybe have yourself added as an authorized user on your parents' credit card, because now their credit history on that card becomes your credit history on that card. And that can help. But the third one is what kind of derails most people, is that most banks and lenders for private student loans offering no cosigner loans want to see income as well. On average, they want to see about $25,000 a year in income. Now, summer jobs and working on the side, all that income counts. It just needs to be on your tax return, so no under the table money. But if you're not making about $25,000 a year, you're going to have a hard time. Combine that with your credit history to get a private student loan with no cosigner. So if you want a private student loan with no cosigner, I recommend checking out Credible. They have private student loans there, and you can see if you would potentially qualify for a private student loan with no cosigner. But once again, it's a challenge because you got to meet those three criteria that typically hold people back. Now, if you're going to get a private student loan and you end up having to get a cosigner, at least do it the right way. We have a full blog post on the blog about how to get a private student loan with a cosigner the right way. And the big thing is make sure you guys set rules and boundaries for each other about making payments on time. And we highly recommend that whoever the cosigner is gets a life insurance policy on the borrower so that if anything were to happen to them, the loan can be paid off. So hopefully that helps you understand what it takes to get a private student loan with no cosigner. I know it's tough. It's hard for someone that's 18, 19, 20, 21 to meet those criteria, but that's what banks are looking for when it comes to lending money. All right, guys, now we're going to get into a reader question. This week's reader question is from Nicole, and Nicole asks, should I consolidate my student loans? And the answer is maybe. So student loan consolidation is a process that's offered for free by the Department of Education that allows you to take multiple federal student loans and put them into a single loan. The benefit of this is just convenience. So instead of making 7 loan payments individually, you can make 1 payment. Now, for most people, though, a lot of their loans are at one company. So if you graduate and all of your loans are at Navient or all of them are at FedLoan, well, you're already effectively consolidated because you're just making one payment on one statement. If your loans are at multiple servicers, consolidating can be very helpful because now instead of having 2 or 3 different bills every month, you can have it all consolidated to one loan at one company. And then the important thing to remember is that student loan consolidation doesn't change anything with your loan. It's not going to lower your interest rate or your payment. Your new consolidation loan is going to be the average weight of all the underlying student loan interest rates. So effectively, the math works out that you're basically paying the exact same thing. Now, with your new consolidation loan, you can change repayment plans and do other things that could potentially lower your payment, but just getting a consolidation loan and consolidating your student loans alone isn't going to change anything. So the question is really, what do you prefer? Do you want to have a single payment with a single loan? Then consolidating can make sense for you. If it doesn't really bother you how your current setup is, then consolidating doesn't really make sense. There are 2 things that you should never do when it comes to student loan consolidation. Number 1 is never consolidate a Parent Plus loan into your student loans. If you do that, you're shooting yourself in the foot because there are a lot of repayment plans now that you cannot access because you have a Parent Plus loan in that consolidation loan. The number 2 thing you should do is you should never consolidate a loan you've already been making IBR, pay-as-you-earn, or revised pay-as-you-earn payments on already. Because when you consolidate, it will reset the clock on any forgiveness. So if you've already been paying a loan under IBR for 5 years and you were expecting to get forgiveness in 20 years, if you consolidate, you reset the 20-year clock. And so you just basically gave yourself 5 more years of student loan payments. So keep that in mind, that consolidating, it's a new loan that you're taking out basically. It's a new loan. It's going to say consolidation loan, and that loan will be treated differently than any loan you had previously. So you could reset the clock on repayment or on forgiveness. All right, guys, hopefully that answers your question about student loan consolidation. If you have any questions, as always, please email them to me. I do get a lot every single week now. So, I might not be able to put yours on a video, but if it's the best question and it's, really informative and asks a great thing, I will definitely include it on the show. So thank you guys very much. If you like what you're seeing, please like and subscribe. And, I hope to see you guys on the blog. Until next time, thanks, guys.